Good morning. Mark Soderberg with ADM Investor Services with your morning ag market update. Well, nearly all green on the screen here this morning. We have seen a little bit of a pullback in wheat prices, now steady to a penny lower. Soybeans are the leader to the upside, drawing support from a report in the South China Morning Post that suggested that U.S. and China would look to extend its trade truce from this past fall for at least another year. That when President Trump meets Chinese leader Yi in Beijing in April. They also report that this meeting has yet to be finalized. We will get export sales a little bit later this morning. Also this morning, Brazil's CONAB, they issued updated production estimates from Brazil, raising both the corn, lowering the corn and wheat production forecast while raising their soybean estimate. Weather-wise, in South America, rains across east-central areas of Argentina are most heavily concentrated in central Santa Fe and into Ocho Rios. Forecasts continue to suggest an improved weather outlook into late February with much-needed rains across this east-central region. West-central areas of Brazil are expected to see a break from recent heavy rains as these rains start to shift a little bit south. This drier outlook in the west-central regions, mostly in Mato Grosso, should promote crop maturation and harvest. Here in the U.S., central Midwest expected to see much above normal temperatures now through the end of the month. Heavy rains are expected to stretch from the southern plains across the Delta and the southern Midwest through early part of next week. Little to no precipitation across the northern half of the Midwest, with very little rain for the northern plains as well. Right now, spot crude oil's down a little bit, down 15 cents a barrel. The dollar's up a touch, while U.S. stock indices also slightly higher. Corn just fractionally better now, up a half a cent at $4.28 in the March contract, while holding within yesterday's range and within a longer-term trading range of $4.15 to $4.40. Yesterday's EPA data, that showed ethanol production rebounded sharply to 326 million gallons from the weather-reduced figure for the previous week, and it was up 2.5% year over year. Also just above the pace needed to reach the USDA corn usage estimate of 5.6 billion bushels. Exports expected to fall between 25 and 60 million bushels. CONAB, they lowered their corn production forecast about 0.5 million metric tons to 138.45, still well above the USDA's 131. Their second crop was trimmed 1.2 million metric tons, this due to reduced acres. The Rosario Board of Trade, they held their Argentine production forecast unchanged at 62 million metric tons, well above the USDA. March beans up 10, meal up $3.50, while oil jumped out up 50 points right now at 57.55, and I believe that is challenging yesterday's contract high. Export sales expected to range between 15 and 45 million bushels on beans, 200 to 450 million metric tons on meal, and between 0 and 15 million metric tons of bean oil. CONAB raised their production forecast 2 million metric tons to 178, still just below the USDA's 180, with many private guesses coming in right around 182 to 185. The Rosario Board of Trade, they raised their Argentine production forecast 1 million metric tons to 48, however, cited that rains here over the next 2 weeks will be critical to crop development moving forward. FOB offers in Brazil remain about 80 cents to a buck below that from the U.S. Gulf. Wheat prices now within a penny or so of unchanged. March Chicago is unchanged, up a penny still in Kansas City at 539.5. CONAB lowered their production forecast to 6.9 million metric tons, down 1, versus USDA up at 8 million metric tons. And we saw a big drop in open interest in Chicago with yesterday's fund buying, so suggesting that was largely short covering. Thanks for listening, everyone. Have a great day.